Hi, this is Eric L. Donovan, the Mindset Disruption Strategist. Let's talk about tax planning. More specifically, let's talk about the 3 levers you can use to adjust and change the amount of taxes that you pay on an annual basis. But before we do that, make sure that you subscribe to this channel so that you can keep up to date with all the new videos that I've got coming out on how you can build generational prosperity and make a kingdom impact. And then hit that notification bell so that every time a new video is posted, you are updated. So let's talk about it. Let's talk about what are the 3 levers that you have to pull and adjust. They're going to change the amount of tax that you pay on an annual basis. Now, before I do this, I'm just going to tell you that these 3 levers make a big difference. My teams and I, in working with families and businesses across the country over the last 5 years, have actually shown families by adjusting the right combination of these levers how to save over $200 million in income or capital gains taxes. Things that are paid every single year on your federal income taxes. These levers have made a difference of $200 million just to people that I've had a chance to partner with. So they're worth listening to. Lever number 1 is how much you're spending on your lifestyle and on the things that you do. Here's what I know. If you spend it, it's gone. The minute you spend something for consumption, the minute you spend something to bring a product or something like that into your life that's not an investment or not something else, and we're going to talk about those other things in just a minute, but the minute you spend it on consumption, it's gone. It's a dollar you can never get back again. And so the most expensive from a tax standpoint has to do with your spending, which is why I encourage people, it's not about budgets and rules, but it's very important that maybe you just ask some real critical questions, which are like, how much is enough? And there's different levels of how much is enough from a spending standpoint, right? How much is enough for us just to meet our basic needs, right? To get by and to do the things that we love, to do the thing, to just take care of our everyday needs. How much is enough for us to spend? Well, see, that's one number, and that number is going to affect how much you pay in taxes. But then there's also another number, right? But what's our number to dream? So some people are like, hey, we need this vacation home, and we need, this property, and we need, all these things that you're spending on, or I need these clothes, and they keep upping their consumption and upping their spending because their income goes up. Well, again, every single dollar that you're spending, it goes out the door and it has to be taxed. What I encourage you is, what if you were to take a step back and really think about it, especially about those dream items, right? So maybe you want a vacation home, but depending on how you're going to use it and the extra expenses and everything that goes along with that, can you turn it into an income producing property, or where it's going to bring some income into you, or is it something you're just going to spend on, and maybe you'd be better off not buying the home and strategically positioning yourself a different way, but maybe you'd be better off just spending once a year on a trip to a place, because the spending on buying the property and the way that expense is going to come in is going to look different than a one-time trip. You understand? These different levers kind of come into this, but at the end of the day, here's what it comes down to from a spending standpoint. Find a finish line, right? At some point, there has to be enough. There has to be a place where you say, you know what, when I get to this level, I've got enough. I've got enough clothes. I've got enough property. I've got enough cars. I've got enough purses, shoes, all sorts of stuff, right? What is my finish line? What's the most that I'm going to spend? What you'll be surprised by is actually when you set that finish line, you probably will start to open your eyes up to the other levers that can be pulled, because this is the most expensive place to sit from a taxation standpoint, is inside of spending. So what is lever number 2 then? Lever number 2 is how you save and how much you save. Now, so understand there are different ways to save or even to invest, right? So you could invest and save into real estate, and the way that you put money into that can have some tax advantages depending on the structure. There's also the way that you create ownership. You could invest in a business, or you could save into a business, right? So there's straight savings that could go into a savings account. There are straight savings that could go into a brokerage account from an investing standpoint, right? And you can be saving on that. On the first year that those dollars come in, you're paying income taxes on them. And then maybe you pay future capital gains tax and things like that, right? So there's that lever of what you're saving, but also how you're saving, how you're investing, the types of products that you're putting it into. Again, real estate versus stock. Real estate has tax deductions that you can take off of it on depreciation. Whereas if you invest into stock and how you're saving, right, you get capital gains rates in the future, but you're not getting any deductions off of it. There's also the structure of how you're saving. So are you using trusts? Some trusts have you pay all the income tax. Some trusts have you paying just the income off of it, but as it grows and pays capital gains. There's charitable trusts that can be used that allow you to minimize a lot of taxes inside of those. There's also generational trusts that, depending on how they're structured, maybe you have somebody else who's in a lower tax bracket pay the taxes, but all these levers are moving in place. Some people have used insurance policies as a pseudo savings account. Depending on the type of policy that you use, some of that can be used to minimize some of your taxes into the future because of the way that you can draw the cash out. What a lot of people know about as well is retirement plans, right? So retirement plans, depending on the structure, can allow you to pay the tax up front, but then as that money grows, you don't pay tax on the growth. And when you take the money out, you don't pay any taxes on that. Or you can do the reverse. You can get some tax deductions up front on what you put into your retirement plans. And then as that money grows, when you take the money out, you got the tax deduction up front, you're gonna have to pay the taxes on the backside of this. All of these are a bunch of moving parts, but you've gotta be thinking, not only how much am I spending, what am I saving, how much am I saving, and how am I actually putting it to work when I save it? But moving each one of these levers will determine the amount of tax that you pay. And having a partner that can come alongside you and help you get really clear on how you do this. Because the one thing that I know, you think like, well, Eric, I want to pay less taxes, so give me some of these strategies. I'm going to tell you, it doesn't work that way. Because what I found that you really have to do is you've got to get really clear on what it is you want to have happen. What's the ultimate outcome that you're trying to create? And inside of that, you find the best strategies that get you to that point. But a question you really have to ask here is, again, how much, I said on spending, it had to do with how much is enough. Guess what? That question comes back up here too. How much is enough for us? How much is enough for us to save for the future, right? And how much of this are we going to need to use? Also, maybe there's some structuring we need to create in here of where we're creating generational wealth, and we're going to structure this to the next generation and minimize some of the taxes. At the same time, you need to ask how much is enough for the next generation and what's the timing of getting that to them. Right? What's the impact going to be? I've got some other videos from a generational wealth standpoint that you really should watch that talk about how we think about getting wealth down to our heirs. But there comes a point you probably want to ask the question, just how much is enough for our heirs? And is there a point that it crosses over from being a blessing to being a burden? And why do I ask this? Well, we said that spending was the most expensive way that you get taxed, right? Well, saving gives you some leverage to begin to have some control over your taxation. But in answering the two questions, how much is enough for us and how much is enough for our heirs, we actually begin to get a lot clarity on the last one, which is giving. And inside of giving is one of the greatest opportunities for tax minimization, especially if you're super clear on the first two. But even inside of giving, there's multiple ways to structure this to minimize taxes, right? So in one instance, you could give today. You could give today either cash or assets, and in giving the cash or assets, you get a tax deduction today. Well, that's pretty cool, because if you're giving today and you get that tax deduction, again, that's pulling down. That's one of the levers that you can pull. But if you're not clear on how much you need to spend and how much you need to save, you might be paying more taxes than you need to. I cannot tell you how many people I've met that are paying way too much in income tax and way too much because they've saved enough and they've got a line that they're living on, but they just keep bringing more income. And the professionals that they're talking to are like, well, you just should put that into the savings account. And they just keep building it up, and it puts multiple taxation on top of layer of taxation. And no one's helping them think through, well, no, you've got enough. Why don't you give more away, which will actually give you more of a tax deduction and more personal satisfaction. How you give is also going to be determined, because if you've got appreciated assets, or if you're going into a business transaction or a transaction with real estate where there's going to be a capital gains tax due. So you've got appreciated assets inside of your stock accounts, you've got a business you're going to sell, or you've got some real estate that you're going to sell that's got any three of those have capital gains taxes on them, right? There are certain charitable strategies that you can use and put in place, which will allow you to get a tax deduction. Some of those might even allow you to continue to make use of the asset during your lifetime, and then it goes to charity after you pass away. And they have their different tax deductions. Each one of these have their different tax deductions with them. The other thing that you can look at is setting up structures, much like in some of these transactions, where you give later. Now, this video is not designed to get into here's each and every strategy that you can use. Here's ways to do it. I've got other videos that'll be coming out that'll be talking specifically about how to reduce your income and capital gains tax. I'm also going to spend a video specifically on how you can reduce your estate taxes, because estate taxes are optional, and we'll talk about that later. But I'm going to specifically have videos on strategies and things you can do. That was not my design today. I just wanted you to open up your mind to disrupt the way that you're thinking and really see you are in control of the amount of income and capital gains tax that you pay on a regular basis. If you will actually take a step back and take control of your life, you might find that you're a key part of like that. Like I said, we've eliminated $200 million in excess taxes over the last 5 years, just by helping people get really, really clear on what are you spending, what and how are you saving, and what are your opportunities to give. And moving each one of these three levers could be a very strategic move for you as well. So I'd encourage you, don't miss them. Because again, every tax dollar that you pay, just like your spending, is gone. You can't use it anymore. And if you had the control or the ability to send money to Congress and the IRS, or if you had the ability to take control of those dollars and choose how they could be used for a greater good or make an impact for today, tomorrow, and eternity, which one would you choose? Yeah, I think you'd choose to be in control. Most people would. And with that, take these three levers and think about how you might be better equipped to take more control over your tax situation. Thank you so much for watching. Have a great day.